During this month, we have started with the intraday trading technique. Then we have learned something on the technical analysis. Then we have graduated to the option trading technique, investment principle as per different ratios. So today is one of the most important event, and in this event we will be learning how to identify the trend. So as you know, we have different studies available in the technical domain. Though these studies are not accepted in the research community, Elliott study also not being accepted by the universities. My research community means those who are certifying universities. So certifying universities, they have not accepted the technical analysis. However, this study is very young. You can say when the basic science of your chemistry, physics and mathematics also came into this world. It has taken some thousands of years to accept those things. Maybe you will be knowing the story of great scientist Galileo. So like that way, this is a very young science, so it will take some time, and with the passage of time it will be definitely accepted by the universities or certifying authorities. Fine. So we will now learn about the identifying the trend. So these are the studies currently available in the technical domain. One is the W.D. Gantz principle, which I used to advocate from the past 9 years. One of the best study. Then the Fibonacci principle, this most of the traders will be knowing. Elliott principle, this also most of you will be knowing. Candlestick and moving average and oscillators. So these are the studies available in our technical domain, and all these studies, how they used to identify a trend. So whenever we talk about a trend, it is nothing but a direction. So direction of up move or direction of down move is known as the trend. So as you know, it is very difficult to identify the trend. It is very difficult task to conclude something on the trend front, but it is one of the essential components for the trading. So once we identify the trend, it doesn't mean that the trend will remain there and it will continue there. Trend may change. So the direction of the price move with respect to time may change in some future course of action. However, the current price action based on the current scenario in the market with respect to its past happening will identify the trend. So trend is nothing but the directional movement of the stock price with respect to time. So in vague words, if I can say above 5,900, I will assume the trend is up. Means once the Nifty goes above this 5,900, I will say that this uptrend will continue. Continue to what point? That is not my prime task. The task is this 5,900. Once the price move above this 5,900, I will say trend is up. So why? How I will identify this 5,900 price point? So different method has their own style of measuring this trend or identifying this trend. W.D. Gantz principle says that any price move above the 30-degree price point set the temporary trend in a intraday. So we'll discuss all these things in the intraday context. Also we will discuss all these things in weekly context. So WD Gantz principle says that any price move above the 30-degree price point set the temporary trend. Similarly, any price fall below the 30-degree price point set the temporary trend. So here I am saying there is a term called temporary trend. So definitely something more is there. Some more price point or more concrete point is still there, which will tell us yes, the trend is confirmed. Similarly, the Fibonacci principle says that any price move above 0.382 sets the trend and any price move above 0.618 confirms the trend. So setting of the trend means the trend has just started. But to get some confirmation, we need to wait for some more time. As per Elliott principle, completion of wave 3 or completion of wave B sets the trend, and any expansion happens in this wave 3 or wave B confirms the trend. As per the candle line principle or the candlestick charting principle, any rising 3 or falling 3 candle pattern with opening or closing gap sets the trend, and we need to take the gap action to confirm those trends. So in the technical analysis session, I have informed you what is the mathematics behind these candle patterns. Then the formation of doji star consecutive for 3 times sets the trend change in the candlestick manner. If you are following the moving average, the 5-period moving average, when it crosses over the 10-period moving average, it sets the trend. It sets the trend, and that too also confirms the trend. So out of this all 5 different trend recognition technique, these two last two, candle pattern and moving average approach, has a 50-50 success and failure ratio. So it has 50 to 50% success and 50% failure ratio. However, the other 3 has some more accuracy. You can say 60 to 70%. You can stick to that. That is based on our past experiments, what we have done. Based on that only I am giving these statistics. So these statistics may vary. So these are the different procedure for identifying this trend. And whenever we are identifying this trend, primarily we have 2 different approach. One is the static approach. Another is a dynamic approach. So the static and the dynamic approach are entirely different. So in the static approach, we'll just take the past pricings, whatever happened on the chart, and based on that we'll apply these parameters and get the result. In the dynamic approach, we'll use the volatility and apply these concepts, any one concept, either Gantz or Fibonacci or Elliott, and we will derive the conclusion. And I have already told you in my earlier session when to apply the Gantz principle, when to apply the Fibonacci principle, and when to apply the Elliott's principle. So on different volatility condition, you need to apply different methods. So I will demonstrate it with some examples. So just keep in mind, any price move above or below 30-degree price point sets the temporary trend. Above or below 45-degree price points confirms the trend. Fibonacci approach, 0.38 to above sets the trend and 0.618 above or below confirms the trend. Elliott principle, wave 3 completion and wave B completion sets the trend and their expansion confirms the trend. So this is what we are going to apply on intraday, also on the weekly data. So this is what I am using the dynamic approach. I have taken the Nifty future and I have calculated its daily volatility till 8th April I have taken. So till today's data I have taken, and the daily volatility is sitting at 0.7042, and this says that tomorrow on the 9th April 2011 I will expect 41.38 price change. So this is the price I am expecting. So 41.38. So my first approach I will be using the WD Gantz approach. So what the WD Gantz approach is saying that. So WD Gantz approach doesn't require this 41 price point. This price point is not required by the WD Gantz. So only the last traded price of the 8th April is enough to identify the trend. So as per this method, WD Gantz method, so I'll be taking the square root of 5877 plus 30-degree factor. This also already I have told you. So how the degree factor is being calculated, that I have already told in the first session. So this entire thing, whatever I will get, I'll take the whole square of that. So this is saying that 5902 above, if the price goes, then this sets the trend, sets the uptrend. Similarly, we need one confirmation of this. So square root of the price 5877 added with 45-degree factor, take the whole square of this, and this will confirm the uptrend. So this sets the uptrend and this confirms the uptrend. Once the uptrend is confirmed, then my choice will be that I will be purchasing this. Then the downtrend is required. So for that, same way, I'll take the square root of the last price point and subtract from 30-degree factor, and I'll take the whole square of this. So this sets the downtrend for tomorrow, and which confirms the downtrend. So take the square root of the same number 5877. I'll subtract it from the 45-degree factor, and the net result I'll take the double multiple or the whole square. So this says that below 5838.73, this confirms the downtrend. This is what we have got as for the WD Gantz approach. So let us go to the Fibonacci approach. So 41 point, we have got the price, expected price move tomorrow is 41.38. So as per the volatility, so our trends sets at 5877. this is the, and added with 0.382 times of this 41.38. So this sets the uptrend, and any price move above this 0.618 times of your 41 point, this is dynamic approach. So this confirms the uptrend. And in the WD Gantz approach, what you have learned, that is a static approach. This is a static approach. WD Gantz dynamic approach I will take in some other session. It is quite different. However, Fibonacci and volatility is used. That's why Fibonacci became dynamic. So this sets the uptrend, and this confirms the uptrend. Now, which price point sets the downtrend? So this is the downtrend price point, 5861 below. This sets the downtrend, and once the price goes below $5,851, this confirms the downtrend. And these Fibonacci and Gantz and Elliott, three methods will be used in three different volatility conditions, and this factor also already I told in the first program itself. So if you have time, you can revisit those recordings, so you'll get some more clarity. So as for the Elliott approach, we need to construct the waves. So these two also already I have told you, and in one of our free ebook on Elliott wave theory, this concept I have explained very well, and that free ebook also available in our site. So though some of the rules we are not going to validate, only with respect to the Fibonacci proportion we will be starting the construction of Elliott wave. So it will start with 5877 and 0.382 times of your price range. So this completes your wave 1. So this is the wave 1. Wave 1 has started from 5877. So as per this Elliott principle, this is the wave 1's starting point, and this is the ending point. So many websites have copied these things from our ebook concepts, but as you know, we are least worried about those factors, because we know that those are the half-cooked things. They cannot throw more light on that. So starting off, wave 1 has started at 5877. It has ended at 5892. So how many price points it has moved? So almost 15.80. So wave 2 will be starting as soon as the wave 1 ends, and where the wave 2 is going to end. So wave 2 will be in the opposite direction of wave 1, and this will be 0.618 decay retracement of wave 1. So wave 1 has retraced 15.80 points. So wave 2 will be retracing from 5892 till 5883. these price points are not that much important for us because we need the wave 3 point. Wave 3 has started here and it has to go, it is in the direction of wave 1. It has to go till 1.272 times of your wave 1 length. So this is the price point it should end. And as soon as the wave 3 ends, wave 4 will start, and wave 4 normally is to have the 0.786 retracement of wave 3, and wave 3 length we need to calculate first. So if the wave 3 is having 20 points, so wave 4 will have, we can say, this is the starting point minus 0.786 times of your 20 points. So this is the wave 4. So wave 3 and wave 4 you have calculated. So once this wave 3 completes, this sets the trend. This sets the trend. 5903, if it completes, then this sets the trend, and that sets the off trend, because I am drawing the wave 1 2 3 4 5 in upward direction, and this sets the upward trend. And once it expands, because this construction of wave 3 continues till 1.272, and the expansion of wave 3 will go till 1.618 times of your wave 1 retracement. And so this started with 5883 and 1.618 times of your wave 1, so it can expand till 5908. So price, if it escalate above 5903 and touches this 5908.61, I can round it to 5909. I will be confirmed that the trend is up. Similarly, you can calculate for the downtrend price points. So Gantz principle, it says 30 degree and 45 degree. Fibonacci says 0.382 and 0.618. Elliott says the wave 3 ending point. This sets the trend, and wave 3 expansion confirms the trend. So this is what the three different methods says. If you cannot recall those lectures what happened on the first day, Gantz approach will be used in an annual volatility band of 30 to 40. Fibonacci approach will be used in the less than 20% volatility, and Elliott approach will be used the greater than 40% annual volatility. So in our case, the daily volatility is 0.70, annual volatility comes to 13.45, which is below 20%. Henceforth, we will be, for tomorrow, for 9th April, we will be following Fibonacci method. So this is what we have got from this analysis. So now same analysis how we can use for the weekly price points. How we can calculate those trend confirmation, or how we can identify the trend for a weekly trade. So here I have taken the weekly data point of Nifty spot, not the Nifty future, Nifty spot. So past 10 weeks data I have taken, which starts with 24th January, the first data point, 31st January, 7th February, 14th February till 28th March. So this completes my 10 weeks data. And from there I have the same way of volatility calculation, ln values and ln square values, then the average, and then the variance and square root of variance, and after multiplying it with 100 I got the variation. Price variation is the volatility, weekly volatility is 2.95%. So if I'll tell you how to find out the yearly volatility, so here you have taken the weekly data points, henceforth, so the weekly volatility multiplied with square root of 52, because we have 52 weeks in a year. So square root of 52. So this says that you are having 21.28 annual volatility if you examine the weekly data points. So based on this 2.95% of the weekly volatility, we are getting the price oscillation of 172 points should happen on the Nifty on a weekly basis. So that week starts after 28th March. So based on this perception, we have just crossed that 20 level of 20. So 21 we are now. So if we are going to apply the Fibonacci principle in this, so what will be our trend confirmation points and the trend identification points? So trend identification 5826 added with this multiplied with 0.382. So this sets the trend. 5891 above, I will say that my price will go up, or the trend is now set to be up, or the trend is signaling a upward movement, and I will be confirmed once it move above 0.618 retracement level of this 172 price point. Once it move above 5932, this confirms that my trend is up. Similarly, based on this weekly data, 5826 minus 172 points multiplied with 0.382, this sets the trend. This sets the trend 5760 below the trend sets to be down, and this will be get confirmed once the price will fall to 5719. So this confirms 5720 level, confirms the downtrend. 5932 level confirms the uptrend. So this helps me if I am an option trader, and if I do this analysis before initiating any option strategy, then I will think of protecting my strategy at this 5719 position if I am expecting the gain from the rising market. If I am expecting the gain from the falling market, I will think of protecting my position at 5932 level. So this trend identification and confirmation points on the weekly data will help me to streamline my portfolio, to manage my portfolio, and to protect my portfolio at those price points. So if any untoward thing happens, and if my view proved to be wrong, then I will be at least protected by some price points. So this is the benefit of our trend identification and the trend confirmation. Regarding the trading part, we have learned lots on that, how to do intraday trade, how to do the option trade, how to invest, all those things we have learned. But when to do that trade? when to be long, when to be short, when we should protect our position, at what price point I should protect my position, or at what price point I should hedge my long position or short position. Those informations you will get from this trend identification techniques, and these are the very simplest technique which anyone can apply, though many advanced techniques are there with respect to Gantz, with respect to Elliott, with respect to Fibonacci. Many advanced techniques are there, but these are the very basic techniques and easy to apply techniques, and anyone can apply this, and by applying this your trade will become more refined. So before going to the question and answer session, please spend a couple of minutes to understand our product and services, and right after that I will join you.
Thank you. Today we are listening Mr. Ranjan's presentation on trend identification topic, and Mr. Ranjan, CEO Smart Finance, is the author of 6 books on capital market as of now. He is the innovator of volatility technique, beta decoupling technique, midpoint method. He is the first person in India to to decode Gantz hexagon principle. All the materials available in the domain of smart finance are being developed by him, and these all materials are the copyright protected material. Those who are copying and putting in under their names in their blogs and all, they are liable to be punished legally anytime. Let's have a look to our paid products. We have total 7 varieties of paid products available in our domain. Each of them costs you 1500, the first 5 products. Investor Technical, Elliott, Fibonacci and Gantz. They have 3 DVDs, 1 book and 1 software. And Future and Option Course and Volatility Software ebook. Each of these costs you 1700. And there is a discounted price for all courses. Instead of 10,900, you can avail at the cost of 8,100 rupees, which includes all the material, 18 DVDs, 6 books and 5 softwares. You can buy it online in our site if interested. And these all books are being written by Mr. Ranjan, and the DVDs explain the video lectures, recorded lectures of Mr. Ranjan. And the softwares do not have any expiry. It is only one-time purchase, and there is no maintenance of the softwares of Smart Finance. Well, our paid event going to be conducted next in the month of April on 23rd. 12 days program, 12 calendar days consecutively it will be there. Alternately, 1 theory and 1 practice session will be conducted. Theory session where we will upload the lecture session of Mr. Ranjan in the e-platform. You will be given the login ID and password where you can listen to the lecture any number of times during the course. The practice sessions will be after following the every theory session, and during market hour 11 o'clock to 12 o'clock it will be there, where Mr. Ranjan will be disclosing the various trade secrets, how the clues are being adopted, how the modifications to the raw technique are being brought during the market hour. Those things can be witnessed by the participants during the course of practice session. Fee structure 8,000 rupees without any material, 13,000 with all material in the sense just explained, 18 DVDs, 6 book and 5 software worth 8,100 rupees. That is included in the 13,000 rupees. You are getting a huge discount with the material. Details available in our site under seminar link. For queries you can call 98403-48971, 044-6499-5823. Those who are in the dilemma of joining and not joining the program, I may request them to take the decision quickly, because very few seats are now left for the same, and we have a very limited number of seats too. Any product related question?